Nicholas Darvas, born in 1920, a professional dancer, got some shares for dancing in a nightclub at Toronto in 1950. The shares at that time were priced at 0.50 cents per share. After a few weeks, when he realized he had these shares, he asked his broker to sell the shares. And he was surprised because he sold the shares for $1.90 per share. 280% profit. Yes, 280% profit in just few weeks. He realized that there's a lot of money in trading in shares. So he started buying shares, but he could never make profit out of those shares. He knew there was something that he is missing, but he was not able to figure it out. So over the next several years, he did a lot of research. Trial and error method were used, and finally he developed a strategy that is called as a Darvas box strategy. And just in over 18 months, he made $2 million. Yes, in 18 months, $2 million. Hi friends, Professor Joe here. I hope you all are doing great. Welcome to this video. You heard it right, Nicholas Darvas. He made $2 million in just over 18 months. But he had to use the right strategy. In this video, we are going to understand the Darvas box strategy in detail, and we are going to find out where we can get these shares so that we can invest and earn money just like Nicholas Darvas. So first, let us understand what is the strategy. The strategy is very simple. First, look for a 52-week breakout. That means a stock should have made a high and then retraced back, and then wait for that breakout to happen. Step 2, after the breakout, wait for the market to move sideways. Once the market starts moving sideways, step 3 is to draw a box around those sideways market using the high and low of the sideways price. Step 4, place a buy above the box and a stop loss below the box. Few things to check at this particular point is that the volumes has to be high and the candles has to look bullish. Once the breakout happens, the buy trade will be executed. If the market goes up and then again start going sideways, continue the same process again. That means draw another box above the high and below the low of the sideways market, place a buy above the high, place the stop loss below the low, and if the price continues in the upward direction, the next trade will be triggered. The only thing that you have to make sure that you do is the previous trade stop loss also has to be brought up to the recent trade stop loss. Continue this process till the prices reverse and the stop loss is triggered. So I think with this explanation, it is very clear that how you are going to make the box, how you are going to enter the trade, where you're going to put your stop loss, and till how long you're going to continue in these trades. So I think it's very clear. So you see, the strategy is very simple. Second important thing is you don't have to sit in front of your system to monitor that the price is being broken. All you have to do is place your buy trade over there and continue. Each buy will have the stop loss below the box. Very simple. The trades automatically get triggered and automatically the stop loss is put, and automatically the stop loss will also get triggered just in case if the price retraces back. Now the next question is, sir, you have told what is the strategy. It is very simple. We are interested in doing it. But where do we find the right stock for this? Very, very simple. You go to screener.in. This is a website which will give you a lot of information about shares. All the fundamental information that is needed is available, and you can set the entire system the way you want it. Now we will discuss about setting up the system in some other video. In this video, we are interested to know where we can find stocks which are ready with the Darvas box strategy. So within screener.in, you go to screens. In screens, you go to price or volume, screen based on price or volume action. You can see Darvas scan. So I just decided I will click on it and see what is the outcome. So I clicked on it just to check the outcome, and voila, there you go. 340 searches were found, 14 pages of information. That means you have 340 stocks which is ready with this strategy where you can enter these trades. But a few tips. What are these few tips? Whenever you are entering into a stock, it is always better to understand few things. First, make sure that you're selecting the stocks that is available in Nifty 50. Why? I have already discussed in a previous video where I have explained every single aspect how a stock is selected in Nifty 50. So you put your first screen as only enter into those stocks which are available in Nifty 50. Second, look at some fundamentals like increasing profitability of the company, increasing revenue of the company, reducing debt of the company, a good qualified management, a growing sector, and if possible, try to find out the business pipeline. So if you look into these aspects, the chances are that you will get the best stocks in the sector, and you can use the Darvas box strategy to maximize your profit. So friends, I hope from this video it is clear that how Mr. Nicholas Darvas made his strategy. It was not easy. He had to go through a lot of research. But once he understood how the stocks run, he started making money in the stock markets. We understood what is the strategy. It is very, very simple. After that, we understood where you can find these stocks and what are the filters you can personally add to these stocks just to make sure that you are entering into the best stocks which has enough liquidity and it has the potential for its price to go higher and higher. Now remember friends, I always warn everybody that however good the stock is, price can go down because of different factors that affect the stock markets. So do not enter with high infusion just because this strategy was used by Mr. Nicholas Darvas. Start with 0.5% or 1% so that even if the first trade hits a stop loss, it is not very, very harsh on your investment. Okay, so be careful about it. Do not risk very huge amount into one share. Now, friends, to learn trading, to learn investing, you need a lot of patience, you need a lot of practice and persistence. All these three things are important. So don't think that this is something very, very quick. You have to give your time. And once you become a master, then you can mint money out of it throughout your life. Another very important aspect about stock markets is learning to take small losses. If you learn to take small losses, and you have the patience to wait for big profits, you will surely become successful in the stock markets. Now, friends, I have written a book, Traders You Can Win, but first learn to lose. This book talks about the traders and investors' psychology, where we have to learn to take small losses and wait for our big profits. Friends, if you love the content that I'm creating, please like and share these videos. So like you, there might be many other people who want to learn Darvas box strategy and many other strategies which I will be teaching in my series of videos. And to get the latest update on all those videos which I am going to create in the future, please subscribe to my channel. All I can say is keep learning, keep growing. Thank you. Namaskar.